He's Chief Technical Market Strategist at Macro Risk Advisors here at Post 9. John, good to see you.
Good to see you again, Mike.
So with regard to the S&P 500, right. You say nothing to complain about, not really doing anything wrong. It doesn't sound like a resounding bull case. But why do you treat the move that way?
Okay, look, I'm a trend follower, right? Yeah. So series of higher highs and higher lows, that's how I have to operate, and I got to view it in that regard. So moving average in the right position. There's no discernible patterns in place. I can complain that it's overbought. Sure, in RSI, that got pretty extended, but overall, that chart is fine, you know. But did it just come out of a base? And I could say we're going to go up another 30% from here? No, but it's in a well-established uptrend.
So nothing to fight at this point outright, even if it doesn't look spring-loaded. You know, you were flagging just exactly how extreme the upside in semis was last time we spoke, and obviously that's come off the boil. How are you thinking about that?
Yeah, similar. So what I did since then, I did a study, took a look at other transformative technology companies. I went back to 1900 for that, and the chart that I brought today was of RCA Corp, okay? And what I found there, that it did exceed its long-term moving average.
Like in the 20s and 30s?
Yes, like in the 20s and 30s. And it's
Radio Corporation of America.
Right. And what it did was it exceeded its 200-day moving average 3 different times in the 1920s, okay? The first 2 times, it got shaken out pretty aggressively. But there was that third time in March of 1928 when it hit it. It went up another 400% since then. So the way I'm looking at things is if we view like the Nvidias of the world as transformative technology. I even did this exercise with GM as well, the same idea. Pull back, but it's a buyable pullback. And I kind of framed this, to everybody else that maybe it's overbought for a reason.
So that's the way. So with Nvidia having, had this double-digit pullback, you feel like it's. I guess the question is, how deep might those become?
Yeah, and that's true. I mean, on average, like the example I brought last time, in semiconductors on average could be 20%. We already got 16-ish already on Nvidia. My guess is maybe we're 2/3 of the way there in terms of price, but probably only halfway there in terms of time. So my guess is it's going to have to muddle along for a little bit before it goes up and away again. But again, be a trend follower, mindful of your levels. These moving averages will trail up with price, and that will give you your exit point. So I can't sit here and guess. An example I gave you last time was, imagine if I got bearish in 1998 and totally missed out on the whole bubble. You get tapped on your shoulder and you'd be out of a job.
If you look at other kind of intermarket things, I mean, a lot of people have been saying, look, credit looks fine. The cyclical parts of the market still holding up. Is any of that changing?
Yeah, that's starting to change. So I think we have to start looking at the macro again. We just saw since the debate, nominal yields are ripping higher. Oil's up 15% in 18 days. That's pretty impressive. But my cross-asset volatility work, my macro uncertainty indicator is starting to tick up. And what has really caught my eye is that credit spreads are starting to poke up. See, the Fed has hiked aggressively, but financial conditions have been relatively loose. But credit default swap spreads are starting to push up. And the work that I've done is that when it's a buy signal on CDXs, it's a risk-off environment. So that brings me to the conclusion of maintaining the allocation I currently have, which is low beta, high-quality stocks. But if that were to persist, because it does look like a base on the chart, that could be something that actually derails everything. It takes my cautious view off the table and something more long or lasting.
And so when it comes translating it into, let's say, S&P terms, in terms of if we did get some kind of a pullback, what threshold is there for where it's like more than routine?
More than routine, we're looking at somewhere around 5,300-ish. You break underneath there, then we start looking like we're topping. But really, that April low, that is it. You can't be outright scared to death about the markets until you break that level. Until then, could just be a consolidation. It could just be a prolonged range. But I think it's premature to be outright bearish above the April lows.